Hey, we're live. We're a little late. Uh, we had a technical difficulty that actually I didn't think we could resolve. I thought we'd have to cancel the whole darn thing, but you know what? Just a hard reboot, which took some time, and here we are. So, sorry, everyone, for that delay, and I can see a bunch of people stuck around. I know some people probably said, "Oh, there's no webinar today," and probably left, but can always catch the recording. Again, our apologies.
I'm really impressed that people stuck around. That says something.
Yeah, it's very, very kind. Yeah, G. Andrea, thank you very much. Jane, hey, yep, thanks.
I think it tells us they've got nothing better to do.
They've got nothing better to do than to listen to a couple of old codgers spout off. Fantastic. And, we've got a lot to spout off today on November 14th, 2024, because the market's insane.
Yeah.
The market's insane. And a lot of people suspected this would happen, but maybe they didn't see it playing out exactly like this. Now, we have had some, I think we went up to about 94 or something at one point, and then a big pullback down to kind of 89 or something. And then we're, kind of normal pullbacks. And we'll look at the chart in a bit, but when you get a strong up move, these are sort of normal size pullbacks, nothing strange there. And we're still holding highs.
I think the peak for the perps on Deribit was high, 93574.
Mm-hmm. So, a lot of people are loving it, of course, a lot of hodlers, and 100K now is just literally like just moments away at any moment.
Yeah, 9% away.
Yeah, it's there. And I think we might have some, in some accounts, we might have some short 100K calls. We've got other short calls, which we've hedged and done stuff.
I found myself selling 120K December calls yesterday as part of my systematic strategy.
I like those. Yeah, nothing's just going to go up one direction forever. It ain't going to happen. Now, there could be big, strong moves, and it could move 20%. Oh, sure. But if you think about it, 100 to 120 is 20%, right? So
we've had a 25% increase this week. That's quite rare, right? But that doesn't happen often.
Yeah. So, actually, why don't I just bring up the chart and we can talk about this. I think this is my. You see this, right? I think it's Forex Factory here, right?
Mm-hmm.
Yeah. Actually, this is interesting because I was looking at this morning. What is it? It's Thursday, right? Excuse me, we've got the unemployment claims. No, that's not right. No, hang on. We should have the Fed. Where's the Fed? Wrong week. There it is. Thursday. Fed shop. There it is. I knew it was there somewhere. Wrong week. So we got the Fed talking this afternoon.
Interesting.
Yeah, we got unemployment.
Okay, just unemployment. I was going to say, how are they going to reconcile the fact that they're trying to reduce interest rates and the market's saying otherwise? Bonds are going down.
I really feel that the Fed has painted itself into a corner, and I don't know if there's an easy way out. I don't know what they're going to do. I think that, again, I'm a little bit. I tend to lean pro the new administration that's in the United States. And when you look at guys like Vivek and Elon, and I'm not talking about immigration or dealing with defense and things. I'm talking about just their fiscal monetary policies. They're talking about just massively reducing overhead and cost and reduction.
There's no way, right? I'm totally with you, right? And I would take a sword to all of the public sector workers in the world, and literally, I think that's gone.
But they can't kill them all, Richard.
We could try, right? But
they might try, yeah.
Only useless parasites go and work for the government because it's like being hanging around the school bully, isn't it? Right?
Yeah.
But they can't, because if they do, they'll destroy the economy. Imagine all those people not paying taxes and not earning salaries and not buying bullshit from China, and the entire global economy collapses if they do this.
If they get their fiscal house in order.
Yeah.
I think we've got to go through the pain. We've got to do it, and I think it's the only chance. And it might end up being the best punt ever.
I'll give you my prediction here and now. What's going to happen?
Okay.
The price of gold is going to be allowed to inflate and then while the Fed is buying gold, and the Treasury will then be able to borrow money against that gold, and dollars are just going to go Weimar and Republic style, and we're going to get to $10,000 an ounce of gold, and whatever that means for Bitcoin. Stocks will go up, the poor will starve, and like it always does. There's never any other way out of any fiat economy, any economy full stop. It's always this way, because the people in power will protect themselves, and the poor will pay. So that probably means that Bitcoin goes up too, but good question as to how, right? Because Bitcoin is a bit like gold with bells on, right? There's extra steps. Like you've got to have a functioning internet, and you've got to have an internet that's connected, and the miners have got to talk to each other. And what happens if you get, for example, somebody cuts all the cables, and then 20 different mining centers all start producing different blockchains, and then they try to reconverge?
You've thought too much about this. Is this in your new book?
Yeah, that could be right.
Richard's End of the World.
If only I had time to write it. Yeah. So I don't know what that scenario means for Bitcoin, but in the short term, I think it means a bull run, right? Because it's going to be a bull run in all assets.
Yeah, well, we see the U.S. dollar just really strong, ripping. Although gold has had a pullback and is still pulling back. I think it's down about 1% today.
Recovered this morning, wasn't it?
25.52 right now. I'm showing roughly announced. But
gold. 2587 I got now. But that's still down off its highs.
Yeah.
But that's kind of expected. I mean,
it had a good run. You have to have pullbacks.
Yeah, and also, there's always pullbacks, and real interest rates are going up because people are not wanting to buy any bonds. And the US dollar going up, well, that's kind of, I think, a symptom of them being the least retarded currency available.
Yeah, it's the least shitty option. Yeah.
Not that it's an accolade, right? But
yeah, we could see. I'm short the U.S. dollar on some currencies, others I'm long. But we'll see what happens. But the U.S. is in a real pickle. Let's not mince words here. And there is no easy way out.
And therefore, so is the world, by the way.
Yeah, it's a very similar phenomenon around the world. Just out of control spending for too long, and here we are.
No, but what I mean is that the US, I mean, there's the old saying in London, right? If the US sneezes, London catches cold. The fact is, the entire economy, global economy, is based around dollars, and more so since USDT has become actually the means of transaction of dollars, as a result of its fueling of Bitcoin. It's a mess. I was going to say I feel very blessed at the minute because I actually get paid in dollars and Bitcoin, so I'm doing okay.
Couldn't you get the trifecta? Because you also own Bitcoin, so it's so worked out quite well at the moment. But those things ebb and flow over time. But it takes time for those things to ebb and flow.
No, I never spend the money till I got it.
Good policy. So I've got the silly chart up. Of course, we've blown through the unicorn, and of course, it was a unicorn moment. This is stellar. I mean, this chart is still, we could say, oh, it's a lower high. If it stays here, we might come down. I'd be okay with that. I'd be okay, but it could just kind of sit here and grind its way up and punch through again. It could. I'm thinking it's probably more likely to come back down to mid to high 80s, but who knows?
I'm definitely selling risk reversals on my systematic books at the moment, just in case. I'm quite happy to hedge the upside with futures, but if there is a big collapse, I want to be catching it with puts. And right now the skews in my favor, so why not?
Yeah, and I think a lot of people might say, well, hang on, well, what would cause it to go down? As I just showed that the ETFs are loading up. They're loading up.
Yeah,
loading up on Bitcoin. Well, we're in a pretty volatile time. We've got this new administration coming in. We've got these people who are brilliant in their own right. Politicians aren't usually brilliant. They're not usually industry professionals. They follow that form, that mold, and we might see a real breaking of the mold. They're going to be fought tooth and nail from the media, from the deep state, from the Fed. There could be a lot of real epic battles being set up to be waged here. And I've said it before. I think I said it on our Monday call with our members at Rogue Trader Academy. I said, I hope, I don't want anybody to get killed, even if I don't like someone. I don't want them killed. I mean, that's ridiculous, right? And we need to be civilized and act like freaking humans. But I suspect that there's going to be another attempt on Trump on his life before he gets inaugurated. There's going to be a good chance that someone's going to try something. Those are the type of events that we need to hedge. And I was on the Deribit X Spaces call with some great, really smart cookies yesterday, and it was discussed there how buying puts. How many times we said it? Market's ripping up. Okay, puts are super, super cheap. Buy that just in case. Maybe it's 1 out of 10 times they're going to come in handy. When they come in handy, you're going to thank the heaven above that you have them. And I think that's a good policy now. And you're selling risk reversals to do so, and that's fine. A bit more risky, I suppose, but you're going to hedge that off with futures. So for you, it doesn't present a risk.
I'm quite happy to pick up the skew and hedge it with futures. Yeah, I'm okay with that. Yeah.
I do have some different accounts. We manage a lot of accounts. I do have some short calls in here, but they've generally been hedged off. When we're pushing up around here, I did sell some in the 90s, some maybe 96s, 92s things. I'm happy to sit and wait. I don't know if I have any expiring tomorrow. They might all be on the 22nd now, but every time Bitcoin does this, every time it looks like, oh my God, it's going down, it's never stopping. Well, guess what? Every time it looks like it's going up and never stopping, guess what? It might take a month to roll over, but it's gonna. It's going to have a reversion to the mean. It might revert to the mean when it's up here. I don't know, but it's gonna.
I tend to find whenever I'm short vol, if I get like 3 perfect days in a row, I always know it's going to end. And I'm pretty sure that it's the same if you're long vol, right? If you're long these long calls in this market, you've got 3 days of mega profits, and you're going to start thinking, "Oh, this is epic. I'm just going to leave this run," and that's when the market bites you, I think.
What do you mean 3 perfect days in a row, though?
Well, if I'm short, I don't know, at the money straddles at like 100 vol and the market doesn't move, that's a perfect day, right?
Gotcha. Yeah. Actually, I had some long calls. I think they're 86.
I've got some. I bought some calls as cover at 80k. And that $10,000 in the money.
Yeah, and I did throw it in an order once it blasted up to 90 to sell them, and I just forgot about them, so I assumed they were sold. But that was brilliant. They're up over 400% at that point. But yeah, and that's sometimes we buy double cover, and we do 1x2s, or buying puts cheap when it's going up, or calls cheap when it's going down. And man, when those pay off, they pay off.
Well, I mean, last week was a lesson in why you sell 1x2s, right, or 1x3s even.
Just makes it so much easier to roll. Your margin just doesn't get all in your face, and you don't get an angry letter from Deribit saying, "Hey, guess what?"
My 1x2s that I sold 2 weeks ago didn't even need rolling; they were just in profit.
Beautiful, yeah, beautiful. Gene, I don't know. S says we love you too much to leave. Well, that's nice, Everyone likes to be loved. We all need love.
Yeah.
So I don't know what we want to talk about with this. Where it's going to go.
Well, that's a good. Let's go to the questions because it's a good question.
Okay, let me read it
from Gene H.
Gene, how do you deal with such strong momentum as a vol seller? Good. Do you need to be a bit directional? The vols didn't rise that much with regard to the 20K, and I ended up selling puts after puts that expired worthless in 30 minutes. I couldn't see how to utilize selling calls and capturing premium there. What a great question. Interesting time though. Like these things happen during these periods, which happen a few times a year, where it's like, whoa.
Yeah. So I'll be honest. Over the past 3 days, I've net lost money being short vol. I think the first day was like -3%. Then the next day was up 1%, and then today is down 0.5%. And that's because we had that sort of up, cross, down movement, which was a total of $10,000 of movement, by the way, which just meant that no amount of delta hedging and no amount of Vega could help you. You just lost more on the gamma than you could make. And some days you get that, right? You just the way it is. But on the whole, I have to say, for the past 5 years, being short vol on Bitcoin has been the way to make money. It's also been the way to blow up horribly if you do it wrong. You've got to know what you're doing and keep your sizes controllable and small, which I don't, by the way, in my prop books, but I do in my systematic books. Just be patient, because Bitcoin is a 70-vol asset, and it will pay you as long as you don't abuse it. But yeah, so any short calls I had, our auto hedger was hedging aggressively. We turned the auto hedger frequency down to minutes intervals, and when the market's surging, that can save you a lot of money, because it means you're hedging a lot more aggressively, and you're capturing the slope of the capturing the curve much better. And so weeks like this, you just hold on for grim death, and you give back a bit of money, and then in the weeks after, you get it all back normally.
I think it's worth noting too that when Bitcoin's at 70 vol or goes to 90 or 110, which it's gone crazy at times, the market can't sustain that. It's not going to stay that way forever, and it's really hard to hold on. It might last a few days. Gosh, it could last a week, but it ain't going to last too much longer than that, because it just can't. I think that people get frustrated because they sold a high vol at a specific strike, then it blows past that strike.
Which is why it was priced what it was priced at, by the way. Because those guys who are buying it are not stupid. They know that one day it's going to go through, right? Quite another question here from Paul. I've been selling calls against my multiple short puts, and having to manage the calls. Not much room left to roll up and out. Yep, common problem. And that's why sometimes it can be helpful, rather than to sell more puts, you can just actually buy some skew with the futures, and then that helps you with the roll. I think the very first course we did was way too complicated for a first course, but it was about using hedging with futures early to take the edge off your deltas of your short calls, right? Because it takes a lot of pain away.
Yeah, and just to elaborate a little bit, so let's say you had some short calls, well, maybe just buy 10% of that position in futures, just a little bit. It's not going to save you, but as the market moves, it becomes more significant, and you can add to it.
Yeah, Also, I have found with the Deribit margin system, it makes sense if you actually hedge the calls with futures rather than selling puts, it actually uses less margin.
Do you know how much margin less?
Well, because if you think about it, if you're at the money a short call, say one Bitcoin of short calls, and you buy half a Bitcoin of futures, so you've perfectly delta hedge, what you've actually done is you've turned that short call into a synthetic straddle in size half a Bitcoin. So you've actually, from the point of view of the margin engine, you've halved the position size.
Yeah, makes sense.
Yeah. Whereas if you hedge it by selling another whole Bitcoin of puts against it, then actually your position size stays at one Bitcoin.
Core says, had some luck, sold downside protection plan on time, slightly in profit, including the 90K selling calls.
Nice.
Hopefully, maybe those expire tomorrow, and hopefully you'll get out.
I was bullied into rolling my 91K calls today out to. I rolled them out to Sunday. It wasn't like a major deal.
Okay, and who knows? We could be at 96 this afternoon after the fact. I don't know, right?
Yeah.
You just never know, really.
Well, I rolled them from 91.5 on today, or expiring tomorrow, to 96 or 95. No, 96 expiring Sunday at a credit.
At a credit, that doesn't seem possible, Richard.
It's insane, right?
It's insane. Impossible. One thing I will mention is, and a lot of people kind of get, so leading up to the presidential election in the United States, we were talking about, okay, we got all this vol on November 8th. and we were selling it. And in some cases, we were able to take short calls or short puts that were expiring at the end of, I think we had a bunch at the end of December, and bring them 1 week before that for a credit by selling calls. The skew is so high there. So we're bringing from low vol to high. So when you're selling, you want to sell high vol. It drops, you buy it back. You never want to roll from high to low if you can help it. Sometimes you get no choice. I think that's what probably a lot of people found themselves in the position. They sold the high vol. They're happy. They're thinking, oh, geez, I sold this. It was 68 vol. The market moved. They're underwater, and they're thinking, where do I roll to? Well, now I got to roll to December or November 22nd or the 29th, whatever, and they're feeling bummed out because they went from 70 vol to 55 or whatever it happens to be. So I don't know if you have any advice for them on that regard.
Yeah, absolutely. Don't do it. Buy futures and wait for expiry, and then write new positions at expiry. You do not want to roll 70 vol to 50 vol. You're just giving money away.
Yeah, that's a hard thing to do for people.
Yeah,
a lot of people don't know that, but that 70 vol is going to collapse. It's going to go down as it comes closer and closer to expiry.
Even if it takes at expiry, it collapses to zero, guaranteed, right? So
guaranteed. So if you've hedged that with futures, at least you captured that full 70%.
Yeah.
Versus losing money rolling to a 55.
Yeah. And then if you then want to rewrite the position or roll it from it being expired or settled, then fantastic. Because now you're going from 0 vol to plus 50.
Yeah. Do you notice I'm coughing less today? I'm still drinking my water, but I'm not coughing. So, okay, we got another question. We got a whole bunch of questions here. Okay. Another one from Paul. I never learned how to calculate the sizing of the hedge with futures, so I don't use it. Okay, that's easy. The cost of futures hedge comes out of theta earnings on the short option, right? Okay. So maybe let's talk about hedging with futures, like the.
So it depends on whether you're looking to accumulate Bitcoin or dollars, right? If you're so let's assume that you're just trading options to get more Bitcoin, then what you want to do is call up the net delta on your position screen, and you might need to press the little columns button and enable it. And the net delta tells you what your delta is in terms of Bitcoin. And so on my account right now, for example, it's showing net delta minus 0.08, which means that in order to be flat delta, I need to buy plus 0.08 Bitcoin of futures.
And he says yes, he's trying to accumulate Bitcoin.
Okay. So whatever your net delta is, if you invert the number and buy that many futures in Bitcoin, your delta will go to 0, and then you'll be delta hedged.
And when you're in the futures screen, I think it defaults to buying USDT, but just click on that, and then you can just choose the amount of Bitcoin.
Let me.
Go ahead. You share if you want.
I'm just going to change this to the. It's the money. That's right. Let me just share the screen here. Share. I changed all my screens around, so I might get this wrong. Entire screen. Oh. That one. There we go. Share. Everyone see that?
I can see that.
Okay, I'll just increase the zoom size just because people might complain. You see here, this book is net delta minus. Oops.
Here,
0.
Let me just. I'm going to reduce the size of our heads just to.
Okay. Yep.
Maybe that's a little bit better. Yeah.
So this book here has a net delta minus 0.08. And if I'm looking at the line that marked BTC, this is the big summary line. Yeah. So, there we are. And because there are no futures, there we are. Yeah, there are no futures in this book. So all of this negative delta is coming from the options. So if I wanted to get my book to 0 delta, I could either do that with perps, or if am I in the money? No, I'm not. So I'm on the 22nd, or on the 22nd, I can look at how much delta I've got there. 22nd is negative, so half of that delta is coming from the 22nd of November options, and the rest is coming from November and December. So I could either say, well, I'll just buy 0.04 perpetuals, or 0.08 for to hedge the whole lot, or I could say, actually, I'll buy 0.04 futures that expire on the 22nd, and I'll buy 0.05 futures that expire on the 29th, and I'll sell 0.01 futures that expire on the 27th, and then I'm still delta hedged, but I've then matched my expiries with my options, which means that when the options expire, the futures will expire at the same time, so I won't then pick up a net delta. Because if I buy futures here, and let me just show you the screen. So BTC perpetuals, for example, and then I hit the entries. What do you do here? So limit, pick a price, try and be a maker, and then here it's saying how many dollars of futures do you want to buy? Well, actually, no, I don't. I want to buy 0.08 bitcoins of futures at a price of 921, for example, and then buy. And I don't want to do it, but it would. Yeah. That's what would happen.
And if you want, and I generally prefer to hedge off each expiry. So you said there's 0.04 expiring on the 22nd, so you could just go to the futures thing.
Like futures, and then 22nd Bitcoin. So here, then I would change this to 0.04.
I think that's what it was.
Yeah, and then I'd buy.
And you could buy it at market too. You could,
I could do it.
Whatever you like.
But, whatever. Deribit. Yeah, the futures books are a little bit thin. I mean, but at 0.1 at a time, doing it. Well, actually, no. See, they're quite wide. The spreads.
Maybe it's just the 22nd that's wide. Well, the monthly expire is probably tighter, I would imagine.
You tend to find that I actually keep planning to build a bot to inject more liquidity in these futures because I could use it myself anyway. No, you're right. It's better. Longer dated is better.
The other thing that that's nice because then you don't have to worry about having this delta surge one way or the other at expiry. Like what happened? Oh, your options expired, but you still had your futures on. So it's nice. Everything expires together. It's nice and tidy. One thing to be aware of too is if you do trade perpetuals, there's nothing wrong with that. If the funding rate gets real high, real low, depending if you're long or short, it can kill you.
Yeah.
If you're holding out for long term, weeks, months, it could destroy your account.
Oh yeah,
you generally prefer to do a dated futures especially if I know it's probably going to be for some time.
So this is a really interesting metric here, the funding rate. So right now the funding rate is 0, which means that actually holding perpetuals is free of cost basis, and that's because perpetuals are trading at roughly the same rate as the spot mark, and that's probably because the market's going down at the moment. Yesterday, I was seeing perp funding rates at 5 basis points per 8 hours. So that's 15 basis points a day. That's like a lot of money if you hold it for years. But we tend to find that with perps, the funding rate doesn't stay in place for a very long time, so you can kind of suck it up for a couple of days. But you just don't, as you say, you don't want to be sitting on it for months. So one thing I often do is I check the. This is going to blow people's minds. Actually, I check the difference between. How do you pick it up? Futures? No. Here we go. Futures. There we are. You can check the different implied.
You might want to zoom in, Richard. It's pretty small.
Sorry. Okay.
Yeah. No. Go ahead.
So where's the implied? There's the funding rate there on the perp, and where's the? There. Here we go. This is the APR, the implied rates. So at the moment, actually, you're being paid to be long the 15th of November, and you're paying 40% for a week to hold the 22nd of November. So actually, the cheapest money is next year. You could just go long the September. And 11% isn't particularly high basis. You'd pay 9% or 10% from like Hidden Road or somebody. And another thing that I do often is I'll hedge with futures with perpetuals. But if I'm in the money on an expiry, I don't want my options, my in the money options to expire, leaving me long perpetuals. Because then I'm suddenly picking up a delta. Let's say I've got 1 Bitcoin of in the money calls, and I'm long 1 Bitcoin of perpetuals, and those calls suddenly expire, then I'm suddenly just long a Bitcoin, of perpetuals, and I'm no longer zero delta. So what I'll do is I'll go to the strategy future spreads and trade and here you can actually buy the future and sell the perp, and then they'll give you $25 to do it.
No. Actually, just click on any one of those, and you can see it'll explain right there if you sit buy or sell what you're buying and what you're selling. It's really straightforward, actually. Yeah.
And if you act as a taker on this, I think you pay half the fees, and you get much better good spreads, and you get a nice. There's no risk. There's an execution risk, and this is if you had to. Actually, I think I spent $7 yesterday to do this trade, and if I'd waited until today, I could have done it at a 1 basis point credit. But actually, that's like 4 basis points I could gain. So that's a shame. Shame I was too early. But you know how it is, right?
Let's see here. I don't know if there's anything else you want to talk on there, or should I go to the next? Okay. Well, actually, part of that question from Paul regarding calculating futures with options, and I hope now it's clear. He says the cost of the futures hedge comes out of the theta earnings on the short options. He's asking that question. That doesn't make sense to me.
The risk is actually the row risk, but you can kind of think of futures having a theta, because if you're long the future and you're paying funding, then overnight you're paying funding costs, and it will settle in cash. But the dashboard doesn't show it as a risk, but it is there. You're right.
And that's why it's so sneaky. If you've got perps and you've just hold them in, it's like you come back to your account, you're like, why's my equity down? It just doesn't make sense. It's like it's just been silently chewing you up, right?
Yeah, exactly.
Yeah.
Okay, so we've got Jeannie. Do you have? Oh, what's this?
Do you have an idea why?
Wait a minute.
The margin changes. What?
Yeah.
Tomorrow we will reduce the minimum roll shock. All currencies to 0.
No impact on margin. Okay, good.
Okay.
Extend dampener from 100 to 200k. Extended factor. Large tail positions and the main direction impact is dependent on position. Will decrease margin for some and increase for other. Great, thanks, guys. What? Just overnight, you're just going to suddenly increase my margin? Nice move. And then deprecating of legacy margin. Oh, that's a shame, because I prefer legacy margin because it tells you what your margin bill is going to be tomorrow.
Yeah, there's no reason why they can't put that feature in the new system. No. It's nice to know what the impact is going to be.
Yeah, okay.
And I think we've asked for it a few times. But
But
all right. So Gene says, do you have an idea why vols are not risen that much, even in the short term? Does that stem from people taking profits, or is there another reason why vols are not marked up? I would have expected 80 to 90 vols short term.
I think nobody was short vol, so nobody's getting squeezed. That's why.
And if if you look on that liquidation heat maps over the past week or two, it's like nobody was selling. There was like nobody was taking that risk of being up there. We've got your crazy
sorry.
Screen there. No problem.
Liquidation heat map. Here we go. Yeah.
Probably have to refresh it.
I think that's maybe.
That's the 24-hour, yeah.
But there's a bit more now on the.
Well, it's accumulating now because Bitcoin's kind of hit the high and settled in a little bit, so people start jumping in. But during that run up, there was nothing. It was just clear sailing. So there wasn't a lot to get in the way.
Yeah, I mean, if you looked at this yesterday, there was. I mean, I looked at it for like a month out, and there was just nothing. No short interest at all.
I think that big pullback yesterday got people thinking, okay, it's going to act like a normal market. Not a lot there.
We'll see. We'll see what inflows we get today.
In the Fed too, we got the Fed, so that could really cause some problems.
But I was actually asking myself the same question, and then I realised that it's just because there aren't many short sellers out there, so. There aren't many people under distress.
Question from Peter. Sorry, was there something else you want to say there, Richard?
No.
Okay.
But no, I do also think there's also almost no retail participation yet, and retail tend to just degen in long calls, causing market makers to have to be short calls, causing them to raise vols, right? And that hasn't been happening.
All right. Question from Peter regarding hedging the futures. Do you factor in or subtract your Bitcoin collateral from the amount?
If only, well, that's why we use net delta rather than delta. So let me go back to the screen.
Yeah, and you might have to enable that column if you don't see it.
Let me go back to here, and here, and here. So you see there's one column here called net delta and one called delta. So the net delta, you use it if you're hedging into Bitcoin, i.e. you're looking to accumulate Bitcoins. And the delta you use if you're accumulating dollars. If you're accumulating dollars, you take your delta and then you add the amount of cash you're holding. And I don't know why they don't show it here, but you have to go to the wallet to see it. And you have to look at the actual cash balance. Is that right, or is it the equity? It might be the equity. Add the equity to the.
I think it's the equity.
Yeah, to the delta, and then that gives you the delta in terms of hedging into dollars. Super complicated. It'd be much easier if they just said, Bitcoin delta, dollar delta.
That's a good suggestion, maybe for the Deribit dev team.
Yeah.
Question from S, who loves us, by the way.
Oh.
I'm thinking about buying puts as a hedge on long, deep in the money call options. Oh, I like those. They have no liquidity to exit. No, I'm not surprised. Am I right to think of this as rolling my in the money call down?
Oh, let me think about that. So
you got thinking about buying puts as a hedge on the deep in the money long calls. And thinking of it as basically rolling in the money call down.
Well, what you're really doing is just selling a stop loss, buying a stop loss, isn't it? It's just a rolling stop, right?
Well, let's say the worst happens. Let's say you've got a long 65,000 call, deep in the money. It expires in December, January or something.
Mm-hmm.
Well, what if Bitcoin comes down to 70, 75?
Mm-hmm.
Those long calls are still going to be worth nothing but a fraction of what they are now. And the puts you bought, let's say you bought 65 puts, are still going to be worthless when they expire. So,
did you say buy puts or sell puts?
Buy puts. As a
hedge. If you buy, so you're basically just turning that long call into an in the money straddle, or guts or strangle, and that's the same as buying a stop loss on what is effectively a long futures position, right?
What else would you think we'd want to do if you had some super in the money long calls to protect them, to try and preserve that as much as possible?
Well, you could sell a collar, so you could sell calls and buy a put. So you're essentially buying a risk reversal. So it's buy risk reversal or sell collar, right? Depending on which terminology you use. Sell calls to pay for it, buy the puts. And
we'd probably buy those puts at the money or closer to the money versus like anything down around the strike of the long calls, right? That's what you're talking about.
Well, if I've been long calls all the way from 60 and I'm sitting on a massive profit of 20, 30K, I think I could say, well, I'll tell you what, I'll sell. I'll buy puts at 80 and sell whatever I need to sell to pay for them. And if it's just December, it's just pretty cheap, right? December 80K puts are going to be
dirt cheap.
261, right? So if basis points, that's 20 delta, and then I would just need to sell the 110,000 calls to pay for them.
Yeah.
So I've collared the upside, but I've also collared any downside, so I've protected myself. And if I'd been long at 60K and I was forced to sell at 110, I think I'm pretty happy, right?
You better be happy. And just as a point to note here is anytime I've got these great positions, I tend to scale out because what's the top? Is it now? Is it 100? I don't know, right? If it's now and I don't sell and it goes down to 74 and settles down there, I'll be pissed. I'm not going to be happy.
And you you get very emotional about this. I mean, yesterday I was looking at the market and I was going, oh my god, it's not going to stop till like 120. And then today it's like going nowhere.
Yeah. The follow up to that, S says, my point is, he's tired of us waffling on.
Yeah.
If I sell the call that is in profit, roll it down to at the money, then it's the same as me buying an at the money put. This is how I'm looking at it.
If you sell the call and buy the put, well, if you sell a call and buy a put at the same strike, you are selling a synthetic future.
But no, he's selling the in the money call, so he's closing the call position. I think that's what you're trying to say, S. Is you're taking all the profit on the call.
Oh,
and you're buying a put. Is that what I think that's what you're saying?
Oh, okay. So
anyways.
Well, so if he does that, he could win twice.
He could win twice.
Yeah.
And you've got all that profit booked in. So if it does go up, you'll roll it.
Okay. So your 60K call is currently worth 3,500 basis points, and to buy the puts is going to cost you 760. So you're going to give up. So you're going to take 2,700 basis points profit net, plus you might get a whole lot more if we dub. Yeah, it's a good trade, right?
Yeah, and we're just assuming you've got a 60K long call. Maybe it's a 75. I mean,
sure, yeah, okay, whatever.
But anyways, yeah. I'm hoping it's a 60K.
If it's 60K, if you were long 60K Decembers, then congratulations. And I'd actually do that trade. I would buy that, sell that position, buy the put, maybe buy like a 90K or 85K as protection.
Yeah,
and I would think about protecting it by collar, maybe, because I mean we might blast on up to 120, but we might not. Right?
Seems unlikely. I think that we're going to spend some time monkeying around, and we could just float around in a $4,000 or $5,000 range for a while. Oh my gosh, he says it's a 58K.
Well,
it's even better.
Yeah,
shit. S, you're a freaking genius.
No, that's nice, right?
Yeah. Is it a December? S, let me know if it's a December or how long you've had it for. That'd be interesting to know. Not you don't have to tell me if you don't want to, but it'd be interesting to know. Cool, great trade, man. Or woman. I don't know. It's just S, so it could be Sarah, could be Sean, could be Sandra. I don't know. Geez, I think we've wasted enough people's time today, Richard. So I've been following you on Patreon since you started. It's end of November expiry. Okay. Oh man, yeah, and the theta is coming out of it quick. So, sorry, it's just probably very little in there. It's just all. Just all intrinsic.
What you could just do is sell a future against it now and say that's it. That's my profit. Whatever it is, it'll expire. I'll collect today's. I'll collect the premium plus, or you could just close it. I mean, sometimes you just got to know when you won, right?
Yeah.
So it says 58K November.
58K November. Yeah.
Some people are so lucky. 3,660.
And let me guess, you bought 10 Bitcoins worth, right?
Yeah, that's 33,000. You're sitting on $33,000 of profit, minus whatever you bought it for
per Bitcoin. I mean, it might just be 0.1 of a Bitcoin, but per Bitcoin, yeah, nice.
Yeah, dude. Let's hope it was 10. In which case, go pay off your mortgage and buy yourself something nice and have something to tell your kids.
There you go. All right. I think we're probably going to wind her down here. We went a little bit longer than usual, but we started late. Again, apologies for that. Technical difficulties with the software, but I think I've got them resolved. Any final words of wisdom before we reconnect with our folks again next week?
Well, apart from if you've made money in this rally, go and do something with the money. Because the last thing you should be doing is thinking, I've doubled my money, I can do it again.
Yeah, what if it goes to 150?
Do not, markets do not let you do that. Take some money out, go and buy something useful, and something useful, not something stupid.
Well, I mean, your useful Lamborghini is a stupid Lamborghini.
If you have any debt, pay off your debt. If you don't own any gold, buy some gold.
Words of wisdom.
And if you are married, then buy something nice for the woman who's making your life wonderful.
Or the man.
Or,
yeah. Marcus says, sounds like solid advice. Fantastic.
Yeah.
Glad someone got something out of this.
Let me tell you, choosing and no flashy ostentation, no flashing it in front of girlfriends to make them love you, because if they marry you for your money, one day you're going to disappoint them, and that's going to end in its disaster, right?
That's a separate webinar we do with marital and life advice.
I gave that lecture to a multimillionaire trader last Friday in Dubai. He was driving me around Dubai in his idiotic Lamborghini Urus, or whatever it's called.
Yeah, not the anus, the Urus, I think.
And by the way, divorce is the most expensive thing you'll ever do. So don't, if you can avoid that, well, so use your winnings to avoid that too.
All right. Hey everyone, thanks for joining us. Always a pleasure. Again, thanks. Sorry we started a little bit late today, but I think we got that resolved. So until next week, let's see what Bitcoin does. I got a funny feeling we might be a little bit lower next Thursday, but let's see. Maybe it's destiny. We're gonna punch 100K.
I was asked to give my prediction of where we'd end the year, and this was for something I had to attend, and my prediction was 65K.
Oh, really? Really? Yeah. I'm talking about next week. I think we're going to go down by next. I could be wrong, but end of the month, end of the year. I think by the end of the year, I think we're going to touch 100K. I've got a feeling. It doesn't mean we're going to blast through it, but it might just for psychological reasons.
So what's that? Is that betting market? Polymarket. So at the moment, polymarket odds for touching 100K are 75%.
Okay.
So my view is the right trade is to go long polymarket, because you double your money if it's right, and short the 100K calls to pay.
Maybe we'll discuss it in our.
Well, if you're wrong on those, I mean, to be as wrong on the 100 calls as you're right on polymarket, the market would have to be at 200K. I mean, right?
That's a no-brainer.
Yeah. So that's a sure win. I bet.
Now, speaking of polymarket, again, we're going to waffle on again. So right after that guy won 30 million, the French guy won 30 million on polymarket with the Trump win. Of course, France. They start to investigate him. But I read this morning that the FBI just pulled the owner in.
Nice.
And, so government's just got to rough people up, and they got to get your effing nose in everything you do, right? So I'm looking forward to this administration getting the hell out of my life and letting me do what the hell I want. I know for a lot of Europeans who grew up under socialism, that those are like swear words, but try freedom for a while. You'll like it.
Yeah.
With all that, let's sign off. Until next week, happy trading, and let's see where we're at. Thanks for joining us, everyone.
Thanks, guys.